Ladies and gentlemen, welcome to an official Pels trading production. Today, we're going to be going over price action. I just whipped up this slideshow in about 20 minutes, so it's not the most professional looking thing in the world, but you will learn a thing or two from this slideshow. So without further ado, let's just jump straight into the slideshow. Dummy down, what is price action? So price action is essentially just the movement of price. Right. In its simplest form, you hear people say price action a lot. You know, a lot of traders are like, oh, maybe they trade, this strategy, but everything comes down, price action is the bottom of the pyramid. The bottom of the triangle is the literal base of everything. It's basically just the way that the chart moves. Pull this picture off the internet. Movement of a security's price on a chart. Security just means like it's just anything. Like NQ is what I trade. So in my case, it's be NQ. So movement of NQ's price on a chart showing buying and selling patterns. That's all it is. Price action is literally just the analysis of the way that price moves on a chart in its most dumbed down and simplest form. This is how it's read a candlestick. You'll see on TradingView, or when you go on your chart, that you have a bunch of different time frames. Now, when people are referencing time frames, this is what they are talking about. There is pretty much any time frame. You can go on any time frame that you want. You have a 1 minute, 2 minute, 3 minute, 5, 10, 15, 30, 45. You even have hours. You have 1 hour, 2 hour, 3, 4. You even have days, weeks, or months, or years if you really wanted to. So you can really look on any time frame. But what exactly is a time frame? A time frame basically means whatever time frame you are on is representative of one singular candle. So right now I'm on the 2 minute, as you can see up here, 2 minutes, 2 lowercase m, which means that every single candle printed on this chart took 2 minutes to form. So that means this candle right here took 2 minutes to form. This candle right here took 2 minutes to form. This candle right here took 2 minutes to form. Every single candle that you're seeing right now took 2 minutes to form. From the start of it to the end of it was a 2 minute span of time. If I go on to the 5 minute, as you probably would have guessed, every single candle is representative of 5 minutes of price movement. So this candle right here was printed in 5 minutes. This candle right here was printed in 5 minutes. This candle right here was printed in 5 minutes, etc. If I go on to the 15, each candle is representative of 15 minutes worth of price movement. If I go on to the hourly, each candle is worth 1 hour of price movement. I think you can get the idea. So that is exactly what a time frame is. How you exactly read the candles is as follows. Now, obviously, you have two different kinds of candles. You have a bullish candle, aka a green candle, and you have a bearish candle, aka a red candle. First, we're going to go over the bullish candle. On the bullish candle here, you can see that we have, 4 little markings out right here. We have an open, close, a high, and a low. You can see that we have 2 parts of a candle, right? We have this little rectangle part, and then we have a line on the top and the bottom. The box part is called the body, and the 2 lines on the top and the bottom are called wicks. This is a body right here, and then this is the wick. Same with the red candle. This is a body, and these are the 2 wicks. Let's just pretend that this is a 5 minute candle. Price managed to come all the way up to here, but also went as low as right here. Now, what the close means at the end of that 5 minutes, as soon as that, the second that 5 minute timer is up, price ended right here. However, in the span of 5 minutes, price was able to get as high as this, the top of the wick, and price was also able to get as low as the bottom of this wick down here on the bottom. The reason that it's a bullish candle is because we closed higher than we opened. It is going to be the exact opposite for a red candle, aka a bearish candle. The open is going to be at the top of the body, and the close is going to be at the bottom of the body. Now, what this means is that at the beginning of the 5 minute timer, or whatever time frame you're on, price started right here, got as high as this, got as low as this, but at the end of the 5 minute timer, price was right here, making it a bearish candle, since the price at the end of the 5 minute timer, or whatever time frame you're on, price was lower than at the start of it. Hopefully that made sense. It's about the most simple way that I can explain it. Anyway, moving on to the next slide. The only kinds of patterns that you need to be using are candlestick patterns. Every single candle has a story. When you look at a candle, you should be able to kind of have an idea of what the market wants to do on any given time frame, because each candle is representative of price movement, and you can tell exactly what happened in that period of time. This is going to be the most bullish candle or bearish candle that you can see. When there is you can see there is no wicks at the top or the bottom of them. If the 5 minute timer started right here, price literally only moved up in that span of 5 minutes, and when the 5 minute timer was up, it was literally the highest that it had been in that span of 5 minutes, or whatever time frame you're on. I know I keep keep saying that. I just really don't want anyone to get confused on why I keep saying 5 minutes. I'm just using it as an example. Now, in my personal strategy, I like a lot of times to look at, I'm always looking at the wicks. And my strategy, the reason I love just playing, like on my chart, I literally have 0 indicators. My chart is literally blank except for the candles, and I just read the candlestick. Second most bullish candle is going to be this, and second most bearish candle is going to be this. It kind of looks like a hammer or an inverse hammer, and that's what you'll hear people refer to them often. Why is this candle bullish? Well, basically, hopefully you can understand in your head already why this is super bullish. Not as bullish as this, but still very bullish. In this 5 minutes, again, just using 5 minutes as an example, we came all the way down to here, but buyers were able to buy us back up and close all the way up here. So we opened right here, came all the way down here. Sellers pushed us all the way down here in this candle, but buyers stepped in and they pushed price all the way back up to even close above our opening price, which means that buyers are essentially outweighing sellers in the market at this given point in time when you see this candle. Now, I like to look for these kinds of candles a lot, and I also do take entries off of these kinds of candles a lot, especially when they are out of my zones. Now, obviously, it's going to be the inverse for a red candle. Price started here, buyers managed to buy the candle all the way up, but then sellers came in and outnumbered them and were able to push this candle all the way back down to actually close red. Now, this is a normal bullish candle. This is a normal bearish candle. We have about the same size top wick and bottom wick, kind of just staying with the trend. Now, these two last ones are where it kind of gets fun, because you can see right here that we have a small body but very big wicks on the top and the bottom, and we made this body about right in the middle of the candle. Buyers and sellers are essentially fighting. Usually when you see one of these, it is a sign, not 100% of the time, obviously, but it can be a good indication that a pop is about to happen in either direction. As you can see right here, it even says neutral. This just means both sides are kind of clashing with each other. Now, this is the least bullish candle. This is the least bearish candle. This is the least bullish because you can see we came all the way up here. Sellers pushed us back down. Least bearish, you can see because sellers pushed us all the way down here, but then buyers came in and then pushed us all the way back up. All right, next slide. Intermission. Drink some water and take some notes on that. I know that was a lot to take in. I know I'm just yapping. I don't really have a script for this video. I'm kind of just, I'm kind of just saying things. Hopefully that made sense. I know I'm repeating myself a lot, and I'm trying to just make this as simple and as easy to understand as possible. Anyway, next slide. Identifying trend. Now, trend is another part of price action besides candle. There are 3 types of movements: uptrend, a sideways trend, aka consolidation, or a downtrend. Now, obviously, an uptrend is when price is steadily moving up. Sideways trend, or sometimes referred to as consolidation, is when price is neither moving up or down, and we're kind of just stuck in a range and moving sideways, as it's literally called. Or we're in a downtrend where price is obviously moving down. Pretty self-explanatory. What by definition is an uptrend? Well, yes, Mark, obviously it's price moving up. However, you're always going to be seeing a higher high and then a higher low in an uptrend, and then a higher high and then a higher low, and then a higher high and then a higher low. Sideways trend, usually going to have a high, an area that your price is struggling to break, and you're usually going to be having a low that price is struggling to break. Therefore, you are in a sideways trend. Sideways trend can also be referred to as a range or consolidation. Downtrend is defined by we have a high, and then you have a lower high, lower low, and then you have a lower high, and then you have a lower low. Just being able to identify trend is always going to be, just a good thing to keep in your mind or your trading arsenal, if you will. How do you identify a high? So I just went over, higher highs, higher lows, higher highs, higher lows for an uptrend, or lower highs, lower lows, lower highs, lower lows for a downtrend. But what actually is a high and a low by definition? This is a high. A high is a green candle followed by a red candle, and a low is a red candle followed by a green candle. Anyway, moving on, that's how you identify a high and low. Understanding levels. Levels are all the same. Some people call them supply and demand zones. Some people call them support and resistance levels. There is a whole plethora of names for the same things. The way that at least I've seen it, how social media has turned is everyone's kind of trying to rebrand the same things. But at the end of the day, all the concepts are the same. They just have a bunch of different names because everyone's trying to rename something into their own thing when actually it's just something that's already existed. In most cases, it's going to be significant areas that price tends to respect. And when I say respect, I mean that price is going to be reversing out of these levels. This is a screenshot that I took just now, like 10 minutes ago on the 2-minute time frame. This first high that I had right here, you can see we had a huge dump out of it, and then we had some also, consolidation around this area as well. Boom, it came right up here, tapped into that high. Look, exactly, we touched the wick literally exactly of that high right here. and then we ended up dumping out of it. Right here, we had this very significant low that was formed. You know, we had a nice move up out of it, boom, price tested again, respects it, boom, out of it, boom, price comes back into it. What do you know? Respects it again. Even right here, we tap back into it, respects it again, boom. What does price do? Rejects out of here 1, 2, 3, 4, 5, 6 times. These are all levels, and that's all they are. With my strategy personally, I just draw out levels on the 2-minute exactly like this, and I, you know, like right here, after seeing this move up, I'd mark out this low, and after seeing price tap into it, I'd look for a long entry. Same up here. After price tapping back into this, I'd look to take a short entry. That's literally all my strategy is, which actually brings me to my next slide. Don't overcomplicate things. It's very easy to overcomplicate things because of all the things that you see online, and the only thing that I truly believe that you need is an understanding of price action. I don't believe that you need any indicators on your chart. I don't think you need any buy or sell signals on your chart or alerts from anyone. All you need is an understanding of price action and the way that price moves, because at the end of the day, when you look at the chart, the price and the way that the candlesticks form and the way that they look are literally telling you exactly how price wants to move and exactly where price wants to go. Any strategy works, okay? I don't care if you're an ICT trader, SMC, support and resistance. You could trade with indicators. I'm not saying there's anything wrong with indicators. I'm saying I don't think they are necessary, but if you do trade with indicators and they work for you, then they work for you. Any strategy works. It's a hill I'll die on, and it's something that I will always preach. People like to constantly shit on people because they don't use the same strategy as them, or they're like, oh, if you trade, you know, support and resistance, you're washed and you don't really know what you're doing, or if you trade with this, you're an idiot. All these other things. People love to talk. Something works for you, then it works for you. Your strategy can be extremely simple or extremely complicated. If you're profitable, what does it matter? If you're a support and resistance trader, if you're making money at the end of the day and you're profitable, what does it matter? Brings me to my next point. Trading is 90% psychology. It's all in your head, man. Don't let other people tell you what to do. I find that this was personally one of my biggest struggles when it came to trading, is I was constantly letting other people tell me that this is what I needed to be doing. Like, oh, Mark, why are you doing this? You shouldn't be doing that. You should be doing this. But I'm like, but this works for me. They're like, no, don't do that. You should be doing this. All of this other thing. It's so loud. There's so much noise in this space. The trading should just be you and the charts. You're finding what works for you, and that's what you need to stick with. And the problem is there's so much noise, and it's so easy to get distracted by all of these things, all of these different kinds of strategies, all of these different kinds of people telling you all these different things, and you're trying to incorporate all of everything into your strategy. Sometimes you start doing too much. You start to learn so much that you start overcomplicating things, bro. Trading is finding an edge, replaying that edge over and over and over again, the same exact way every single time, and managing your risk properly. Don't let other people tell you what to do. Find out what works for you and stick to it, please. Don't let me tell you what to do. Do not let me influence you in any way. If you like to use my strategy, then you like to use my strategy that I've gone over. If you like to use someone else's strategy, maybe you take my strategy and you add, you know, your own little twist to it. Maybe you kind of like to see certain closes sometimes, or, you know, other things sometimes. Maybe you take a little bit of things that you've learned from me, a little bit of things that you've learned from over here, a little bit of things from over here that you've learned, back test them and make your own kind of thing. And, you know, you back test it and you see that it works for you, boom, stick to that. If it works for you, do it. I don't care. Don't let anyone tell you what to do, and just lock in. It's just you and the chart. Anyway, that is going to wrap up this video. I'm very passionate about this. I really hope that I can, you know, spread my knowledge and spread just the things that I've learned, and things that, and just be honest. Like, that's my goal. My goal on here is to be very transparent with you guys. Kind of like, I want to be that light that doesn't really, you know, you don't see often online, because it's very easy, especially in a space such as day trading, to get caught on the wrong side of things. Lying people, scams, all of the above. You know exactly what I'm talking about. You know, trading is often very misunderstood, especially from an outside in perspective. So someone who's been in the actual game for, you know, a couple of years now, I want to actually be the one that's spreading honest to God truth and nothing else. Trading is hard. You're not gonna ever get rich from it overnight. Just set realistic expectations for yourself. Keep grinding. Hopefully you learned a thing or two from this video. Make sure to subscribe to the channel. I'm gonna be just, you know, continue pumping out content, staying on this grind, trying to do my best to help people out. We're all on this journey together. So I thank you guys so much for watching this video. If you did enjoy it, make sure to like, subscribe, again, everything. Thank you guys for watching. I'll see you in the next video. Peace.